Investors and traders, welcome to the channel Market Chat. And today is 23rd of June 2024. I hope everyone is having a great weekend. In this video segment, we will be taking a look at the key US markets. We'll be covering the US dollar. We will take a look at a brief look at the gold market, and then we will not be taking a look at the treasuries because I did a video last Friday, so we have already done that. And then we'll take a look at some of the European markets quickly, and then the sectors for the United States markets, and also we will then begin to dig deep into the US stock indices. So it's going to be a little bit different video. Last Friday I showed you how we can use the standard deviations that I published for the daily ranges and weekly ranges for intraday trading, and on the weekly chart this time I'm going to show you that how effective these are, and we should actually be watching this. So this is what the format will look like, and as always this video is for educational purposes only, and it is not financial advice. What we are looking at is the daily chart of the Dow Jones Industrial Cash Index, and here we had a key timing coming up on the 1st of July. We have to give it 2 to 3 trading days on either side of this key day. Last Friday was also a minor key date which came in, and we saw a narrow trading range and Dow closing a little bit lower. And what I'm expecting is that perhaps in the early part of the week we could see some weakness coming to the market, and I'll just we'll talk more about this and give you some levels based on standard deviation later in the video. Okay, so we'll now move over to the dollar index, and I'm going to move to the weekly chart for this. Here we go. This is the weekly chart of dollar index, and what we can see is that the US dollar is pretty firm. Now we have been working with an assumption that this 107 level was a pretty important high, and when the market actually failed to reach higher and take out the 107 highs around the 29th of April, then we were actually looking for the dollar to move lower. And for a number of weeks, this is what the dollar did. But if you look at it, what it's doing now is, in fact, it is marking higher lows. So it's in a big trading range here, but this low, which came in on the 3rd of June, beginning of the month of June, the market is moving higher. Now, this is coming right from the from George Soros's book, The Alchemy of Finance. And what he mentioned is that when a country has a policy where the fiscal policy expansionary, so for example, the taxation moving lower or spending is there, so the country is spending, and the monetary policy is tight, so meaning that interest rates are higher, or they're going to go higher, or they're going to stay higher for longer. In that scenario, the value of the currency is going to go up. And this is what we are seeing in the US dollar, because if you go back to the last year, the marketplace was actually marking in about at least 3 rate cuts for 2024, off the back of the meeting that took place last November in 2023, the FOMC. But here we are towards the end of the June, and we have not even had one single rate cut. And the meeting which was done by Federal Reserve, FOMC, in the month of June, they mentioned to expect one rate cut and the possibility of higher for longer. Now, some other parts of the world, for example, the ECB, European Central Bank, they did start cutting the rates. And so we did have a rate cut, a major central bank doing that, and the chances are that other banks, such as the Bank of England, who did not, they held rates this month in June, but the expectations are building that in July or even in August, they might actually do a rate cut. Now in the United Kingdom, it's also a little bit political, because 4th of July is also when the national elections are taking place. So Bank of England coming in and doing rate cut might have seemed a little bit odd as well, just thinking out loud. So this is one of the reasons that the US dollar is pretty strong. The other reason I can think of is in certain parts of the world there are wars going on, and US dollar is considered to be a safe haven. And also if the US assets are being bought, such as stocks or property, etc., then the US businesses, private equity, those need to be bought in US dollars. So of course there's going to be a demand coming in from the flows as well. So we have got the fiscal policy and monetary policy situation, and also the flows, and we see a dollar which is pretty firm. Now, from a technical perspective, what we can look at is if the market is moving in this ABCD higher, the first thing to watch is the 107 level. If it's going to give way, then the expectations are that this market could go anywhere between 108.65 to as high as 109.85, which will be the completion of this ABCD, and it will be fairly close towards the 78.6% retracement as well. So it looks like with 3 consecutive weeks, the dollar actually each time is closing higher on closing basis. Pretty big ranges for the week. And if we were to look at your USD on the flip side of this, here we go. What we can see is that finally this big ABCD that we were watching, the market might finally get there around 104 level. And I've not drawn this, but there are smaller ABCDs around here as well, which could point towards this level as well or nearby. So there we go. This is the dollar. Now a quick look at the gold market. So this is the weekly chart of gold. This is COMEX gold, traded on the COMEX exchange futures chart. The price is going to be a little bit different if you are comparing against the spot market. Now what we can see is this market is in a pretty big trading range, but coming right at these key levels of 1.618 expansion and 1.272 extension of these swing highs here. And what do I mean by these 1.272? So you take A, B, C, and this has actually extended here. There we go. We do have higher levels for gold, so about 2,500 and 2,700. Our opinion is gold is in a bull market, and those levels could be achieved. But what we have seen over the course of last few trading weeks, nearly about 6 weeks, and the market has just gone, in a trading range. Now, if we just move one level lower, and there we go. So this is the daily chart. Here we have this ABCD that we have been watching, which could in fact see the market pull back to 2280 level, just getting below these lows, which came in on the 1st of May around 2280.85. So breaking that low just below that, and that might actually mark the end of this correction. That's also a possibility. So this is something that we are watching. I'm not drawn another ABC, but I do see another ABC, which might in fact take us in a similar kind of region. And here we go. So yeah, there we go. 2280. It's going to be a pretty important level to watch. And on the intraday 30-minute chart, which I'm not going to go into the details, we have got some other levels which are coming in that region as well. So it looks like the market wants to go and test the 2280 level. All right, okay, so this is the gold market, and the good thing is that with the dollar being as strong as it is, in my opinion, the gold has held pretty well. Now, one market, which is the Bitcoin. Let's take a look at the Bitcoin market. Here we go. Now, I had done a video in which we took a look at the Lucas spiral, and I'll put a link to it towards the end of this video, maybe also in the description. Watch that video. That video was done quite a while ago. I believe I did it in the month of May, and what that video is actually telling is how this market, which is a New York market, is following a sequence. It's like a spiral. It's called the Lucas spiral, named after the French mathematician who came up with a series of numbers quite similar to Fibonacci. And in fact, there's a relationship between Lucas numbers and Fibonacci numbers, and he's actually one of the mathematicians who actually popularized the Fibonacci sequence. So it's really interesting to watch that, and that actually called in a top coming in around the month of March, and we have just seen this market go in a trading range. And when a market like this has gone in this at the top in a trading range like this, as chances are it's actually building the cause to test the lower end of this range here. So coming back to around 56,000, maybe a little bit lower to around 54,000. And if we were to do an ABCD like this, here we go. And in fact, we could see this market come as low as 54,000, 54,200 to be precise. That's the one-to-one price projection. And the market will be lower than the 200-day moving average as well. So I'll do an update on that video and point the next Luca stage. But the Lucas spiral was indicating lower prices to be expected in this market. And with the dollar, US dollar being firm, and the actually gold being firm as well, comparatively speaking, because the dollar is pretty strong, the Bitcoin is actually moving lower. So this is interesting. And if we were to take a quick look at the coin, which is the Coinbase, you can see it's also just gone sideways right at these between 61.8% and 78.6% retracement. I would have thought with the ETFs coming in, which actually all of that transactions will go through Coinbase, there should be a pretty significant demand for this, but it hasn't happened. So that's something, a food for thought. We have to think about. Now it's possible it's just consolidating here and move higher, but if you have an opinion about some directional bias to the downside for the Bitcoin, another way to take exposure might be by taking a look at the Coinbase and putting a put on it, buying a put, or just shorting the stock. Again, it's not a financial advice. You do whatever you want. You have to do your own research. I'm not qualified to do any advice. But yeah, this is something I wanted to bring to the attention, that what is happening with Bitcoin. Okay, now we'll just move and take a look at the foreign markets. So we'll start by taking a look at DAX, and there's really interesting what is happening in the European markets. Here we go. So the European markets, if you would remember, we had drawn this 1.272 expansion of this swing, and the market has not been able to take these high out since middle of May. And here we go, we are reaching pretty much towards the end of June, so it's been a little over a month now, and the market has moved lower, so it has gone through a correction. Now of course the market is still above this low, so there's nothing changed in the trend, but it has pulled back and given up a certain percentage from this all-time highs here, and now it's just trading in a massive trading range within this mother candle formed on the 14th of June 2024. Now it might have to do with some political stuff going on with elections, etc. Who knows what the fundamentals are, but from a technical perspective, this 1.272 proved to be a pretty good resistance. On the other hand, the US markets, they have been much stronger, they have been firmer, and they have been making new all-time highs. But when the European markets were the first to actually bottom around the 19th of March, because they held this 38.2% retracement. And also we are now straight away going to look at the FTSE 100, and that also held the 38.2% retracement, while the major indices in the US, they were still in they corrected for a few more days. So this was an interesting observation, that it appeared that maybe the indices in Europe, they were moving a little bit ahead. So here looks like we might have done some sort of an end to this correction, because the market has pulled back pretty much to 78.6% retracement, but it needs to build further momentum to the upside if it's likely to move. And if it does, then the 1.618 around 19,160 will be the target. If we take a look at the UK's FTSE 100, okay, I think I've got this one, what we normally take a look at. Here we go, something really interesting happening in the FTSE. So FTSE, you can see it has also moved lower since the 15th of May, and we also have got elections coming on the 4th of July. So of course there is some instability, in the sense that there's could be a likely change of the government. A new government could come in with new policies. There's going to be some time required for the settlement of the new government, etc. How their policies will affect businesses, etc., etc. And of course, if the current government remains in power, then not much changes, but there might be some reshuffle. But this might be another fundamental cause for this market to pull down. But from a technical perspective, it had completed this ABCD in purple here, and also now what the market has done. Look, it has actually, this is this market symmetry concept. This was the largest correction that we have seen last year, and the market has gone and actually corrected by the same amount. And what is happening is, it has found, in my opinion, has formed a double bottom pattern formation around here. Market was not able to take the lows of the 11th of June when it retested that on the 14th of June, which was a Friday. So if the lows are in place, then we are looking at 8,560 followed by 8,670, and around there we have this big brown ABCD also completing. So the market will be moving into a zone which could provide pretty strong resistance level. And we have the 1.6% expansion coming in for this BC swing of the brown ABCD as well. So it's moving into a region where maybe there's stiff resistance and maybe a bigger pullback could be expected. But for now, I'm treating this region as a target, as long as these lows of 8,117 remain in place. Okay. Now, let's do the indices first. And this time I'm not going to spend a lot of time on the indices, because the levels that we have been watching, they have been there for they were forecasted months in advance, and you have seen the markets move towards those targets. So we'll just quickly reiterate those. So let's take a look at the NASDAQ 100 first. This is the futures market. I'm going to go to the weekly chart, and here we go. So what we see is that we have a long-term established target of 20,750, where we have this ABCD in green completing. The market has come pretty close to that last week, and it gave up the gains, and it still closed higher. But a fair amount of the gains have been given. Not a huge amount when you look at the weekly candles, but the market closed, quite a few points lower compared to its high that was reached, which is fine because we had the timing coming in as well. So, but we're still looking at 20,750 as a level that market would actually attract to. And if we just move to the daily chart in here, what we can see is that we have this ABCD, this dotted line completing around that region. So that smaller one has completed as well. So some sort of a pullback, and it's not even a massive pullback. It's kind of on the card, so that's fine. And if we were to look at QQQ, and let's do that on the weekly chart, and here we go. 504 it could be a region where the market actually could move to, so that's pretty interesting. And here something really interesting that I want to show you on the NQ. So let's go back to the NQ chart. I am going to move down to, actually I need to go to the daily chart and then move down to 30 minutes. And I'm going to move down to the 30-minute chart, right? Here we go. So this is something that I wanted to show you guys here. And I'm going to bring the this screenshot. And these are the ranges from last week. So you can see 17th of June. So that was the Monday. And on the Sunday, we had done this. Ignore this last part because I think I did update this, but this VIX number is wrong. But on the top, it's fine. So that was actually giving us certain levels to watch in NQ, where we have the plus 1 standard deviation, plus 2 standard deviation, and the market was pretty strong because the market had been making all-time highs. The a week before, so the probability is likely to move higher. So that was the kind of thing to take a look at. And if we just draw this 20,295, so just keeping it here, that's the +1 standard deviation, and moving it now, and I've drawn it on the chart, and you can see this is where the market went. It went a little bit higher. The high was around 20,371, so it went 170 points above that, and then what we see is that the market pulled back. And where did it pull back to? It pulled back to its opening of the week. There we go. Let me show you. 19,957, which is basically the close of the previous week. So that is kind of, when it closed the previous week, that close has significance because the trading week closed at that price point. Throughout the week, the buyers and the sellers, they were actually transacting with each other, and then they agreed on a price which was deemed to be fair by the buyers and the sellers, the bulls and the bears, and they settled on this figure. So you could also think of this as a mean, because these equity indices are mean reverting assets. So once they reach the kind of range that we were expecting them to, so that was the +1 standard deviation, a pullback to the mean happened. So it went and closed, pulled back right to the opening of or the closing, excuse me, of the previous week. We could also have the electronic open as well, and then we can also even put the regular trading hours open as well. So the market, when it reached here, it just been consolidating here, right here. And on the video that was done last Friday, on the 5-minute chart, I had actually shown you the ABCD it was completing and how it reached the standard deviation levels of -1 only for the daily ranges. This is why when I give these ranges out, please do pay attention to those as well, because they do have a meaning to them. So it's just wanted to point out to you guys by showing you what the market had actually done last week. Now, the interesting thing is what the market is likely to do this next week. This is something people want to know, everyone would want to know. So what we can do is we can actually put some lines on our chart, and what we can see is that on Thursday the market has started to pull back. The chances are, and also because of the minor timing that we had and a major timing coming up, this selling might actually still continue. We could see a retracement higher, and I'll just draw the pattern for that as well. But more selling might come next week. It's possible. And if the selling is likely to come in, then what we can do is we can draw the mean, which is going to be the close for the week of 21st of June. And let me have these figures come up. This is now for the next week. It's not the week which finished, but the week which is likely to come. So there we go. Now we have a close coming in on 20,009 and three quarters. So we just draw that line there, and then we can have a -1 standard deviation line drawn here. So that is around 19,643 and 3/4. So I've drawn that line here. So what could happen is that the market, if it begins to break these lows, and I'm going to push this away and then show you the lows around here, which is the last Friday's lows, then the chances or the expectations for the market to move lower to the -1 standard deviation will increase. And in fact, we might be able to see, if the selling is likely to continue, some sort of a pattern formation like this around here. This could happen. That's one way. But the chances are the market is likely to retrace up a little bit further. So that's another chance. And this is where we'll get our indication what might be on the cards. So here we go. Let's draw 382 here. And what we can have is then a pattern formation like this. So we could have an ABCD, pretty much very close to, actually I've not even drawn this, very close right here, very close to the 38.2%, which will come around 20,087 to, so roughly around 20,100 is the region that we should be watching. If the market begins to fail here, which is also right at the top of this trading range coming in from the last Friday here, then we could have a possibility that the market is actually will make an attempt to move towards the minus one standard deviation for the week. So we could have this ABCD here, and that's quite a few points away that you can look at. You know, where the market closed is about 20,000, and the minus one standard deviation level is 19,650. So you'll see a lot of people come out. Okay, the market has stopped. This has happened. Maybe they use the C word, the crash word. But in fact, what the market might just be doing is just, moving towards the minus one standard deviation. Where we should begin to get concerned is if the market begins to move towards the minus two standard deviation, which will be 19,277, and or even it can go lower than this. This is a rare occurrence, but it begins to happen. Yeah, we need to pay attention, but it's pretty rare to happen, but it could happen. But the odds favor that we might just, if there is going to be a further pullback and the selling to continue, minus one standard deviation coming in 19,643. But once we get to these levels, we should be watching for this kind of ABCD formation, and even we could have an expansion like this. That should give us some, people who like to trade might get a lower risk entry by watching this. And this is again, the market is not trading yet, so we might actually begin to get further patterns, which will give us a pretty good idea for an entry to the long side, because what the market has been doing is moving up. So the line of least resistance is to the upside, right? So again, just keep this minus one standard deviation level in mind for next week. I'm gonna go and delete these, and hopefully I'll be able to do, although I'm traveling next week, but I will be able to do some videos on intraday, on daily basis, and we can take a look at the further further pattern formations that take place on the daily charts. Okay, now a quick one on the ES, and here we go. So the ES on the S&P 500 E-mini futures, it has done this ABCD on the daily chart. It has also completed its 1.618 expansion, and we have seen the market actually pull back slightly, very slightly, over the course of the next two trading days, which is absolutely fine. Now we'll just again move to the 30-minute chart, where I just want to show you. I've actually already drawn this because it's a slightly different pattern formation to what happened with the NASDAQ 100. Sometimes one index is leading compared to the other one. So you have to look at these things together to make an assessment for the market. On the 5-minute chart, which is the video that I've done last Friday, I've already shown you how it worked with NQ and ES for the standard deviation levels. But for the weekly levels, here are our levels. Here we go. So these were a week in advance, 55.93, and where did the market go? It came pretty close to 55.93, which I've already drawn here. And let me move it away. In fact, we just the high came in as high as 55.88. So we just missed it by what, 5-6 points. That's not bad in my opinion. And then what did it do? It just went back to the mean, which was the close. Let me actually bring it here. 5,500. Yeah, actually, it did not go back to the mean, which was previous week's close, 5,500. It stayed pretty higher here. So this market, in fact, was a little bit stronger, or in other words, the NASDAQ had a bigger pullback because it just went back to the mean. So what happened is that two things will happen really when we are looking at these levels. the market could move really quickly and move the price will move away from the mean, and then at some point the market might have just moved too quickly. Then either the price will catch up with the mean, or the mean will slowly catch up with the price. So the price will just begin to consolidate. In the NASDAQ 100, what we saw was that actually after reaching the +1 standard deviation, the market pulled back and caught up with its mean. So what we are looking at now is the market being a little bit higher, but it went back a fair amount. So in red, what we see is the weekly close, which is for the last Friday, 55.36. And what we should be watching for is if there's going to be further selling to come in the -1 standard deviation level, which comes around 54.35. So this is something that we will be paying close attention to for these levels for next week. All right. Okay, so I'm a little bit conscious of the time, so we've got about half an hour already into the video. I hope I was able to show you guys how we can use this data that I show you, and it does have a meaning, a place, how we can use them in conjunction with the pattern formations that we see, and we could have a framework that we can use to work with. So I think I will not have the time to go and take a look at the sector, so I'll end the video here. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.